how to predict reversals in the market with a high win rate using certain time frame sequences. That's what we are going to talk about today. And no, it is not some type of ICT liquidity sweep reversal shooting star engulfing pattern stick. It doesn't rely off of that. It doesn't rely off of one time frame using a certain chart pattern to call the exact sniper entries. I hate people like that. That's like, I want the sniper entry to give me 20-1 reward to risk. That doesn't exist, ladies and gentlemen. No. Okay, been doing this for 10 years, helping traders become consistently profitable. In fact, I'm about to complete my one-on-one training with somebody, and this person has a 75% win rate trading with this type of reversal. Okay, and you need to understand this concept because it was my light bulb moment for me when I started trading. I appreciate if you guys like the video, subscribe, and if you have any questions, let me know on social media at MoneyBallAustin or let me know in the comments below. All right, let's get into this. So the main concept that you need to understand if you're going to start calling these type of reversals in the market is that prices turn from inside out. And this was my light bulb moment. Okay, prices turn from inside out, meaning smaller time frame to larger time frame, meaning the 5-minute is going to turn before the 15-minute. The 15-minute is going to turn before the hourly. The hourly is going to turn before the 4-hour, and so on and so on. I will show you the time frames in a second, but let me explain to you this concept, okay? Here we are looking at on gold. Gold has made this massive move to the upside, but there have been lots of times where we've had rallies, okay, and we've had pullbacks. We've had rallies, and then we have pullbacks, okay? And then we go base, sideways, we rally, and we go down, pullbacks, right? Overall, prices can only go up or down. But if you want to be spotting these areas of when it's going to start turning and when we're going to start catching a reversal, you need to understand that prices turn from inside out. So if you have a market like this on a daily time frame, let's just say, for example, let's go in like this, okay? If you have prices rallying up to the upside, if you go to a smaller time frame, and we're going to do this as an example, but I have to draw this out so that you understand. If you see for the last 5 daily candlesticks, it's all been black. In fact, I think gold has been doing that right now, so we'll actually have a look at that. You're going to see on smaller time frames, on a 1 hour, this is going to look like this. Higher highs and higher lows, higher highs and higher lows, okay? By the time that we start eventually starting to reverse, say for example here, we sold off, okay? Here, let me delete this so that you guys can see. Okay, it moves in waves, okay? And you got to understand it moves from smaller time frame to larger time frame. Here, this whole move, it was rallying up and up and up and up. Eventually, we get this move to the downside. But you need to understand if you're going to call this reversal, prices are going to turn inside out, okay? So prices are going to turn on a smaller time frame. So on a 1 hour time frame, we're going to start to see, let me go back over here, we're going to start to see prices going sideways, breaking momentum lines, and then shooting to the downside. There's going to be this time period of when we're going up, higher highs, higher lows, and then we start removing higher highs and higher lows. We start breaking those trend lines, and we start making lower lows and lower highs. That on a daily candlestick is only going to be 1 or 2 or 3 candlesticks where it's going to the downside, like this. But on a 1 hour time frame, this is going to be broken down into 24 different candlesticks, potentially 48, potentially 72. Okay, it could be more, and I'm going to go over several examples because they don't all look picture perfect. Okay, sometimes what you're going to see price doing is it's going to be like this, higher highs, fake outs, continue higher highs, maybe it's going to slowly grind down, then drop. They all look slightly different because I know a lot of people come to me like, when I see your video, it makes so much sense, but when I do it, it looks completely different. We're going to dive into about 8 different examples, but this is the concept that you have to understand, is prices will turn from inside out, okay? So if we look over here, where did prices start to reverse? Okay, well, prices started to reverse over here. It was going down, then it rallied up. It started rallying up and then reversing from here, okay? And then we've been rallying up. And so we'll look at these last kind of areas right here, right now. All right, and we're going to get into trade reviews. And what you need to understand, on a daily time frame, this is 2-3 candlesticks going down, and then we start rallying up, right? But what you're going to notice here is you're going to see prices going like this. Lower low, lower high, to sideways, to higher highs, right? And what we're waiting for to call the reversal is we're waiting for prices to break structure. Confirmation, we call it. We're waiting for evidence of buyers to step in, okay? We want prices to remove opposing pivot point zones, break trend lines, and then we start entering our buy setup, okay? So this is what you're going to see in here, same thing up here, and then eventually that's what we want to see up here. So we're gonna go down to like a 30-minute time frame so that you guys can start to see this, okay? When we started rallying from up here, right? We were rallying. Like I just said, we were talking about how gold was rallying for like 5 straight days, remember, going into this? Look at this, like 10 straight days it started rallying. Okay, look on a smaller time frame, guys. This is this whole rally to the upside. At some point, this is going to start turning, okay? And so we eventually start, it's a good to scroll out. I see so many people scroll so far in and they get hyper-focused. Scroll out, get a better sense of what's happening, okay? And you're going to see this, higher highs and higher lows, higher highs and higher lows, all right? Eventually, we start making lower lows and lower highs, right? Okay, and we eventually go like that, okay? And we start going sideways more, okay? Sideways, this is completely different now, right? And now we start making lower lows, okay? But you can start to see this transition period of when we're going high and then we're going low, sideways, and then we start going lower. Same thing over here in this box square right here, okay? We are making higher highs and lower lows and lower highs at this point, right? It's a very easy concept that you guys don't need to struggle with, okay? You need to understand prices can only go up or down, right? You have a 50-50 chance of being right. If it goes sideways and you're in long, nothing bad can happen, all right? You're just you're staying stagnant, all right? You're not losing, you're not making money. So prices can only go up or down, right? So we need to find key areas of interest to buy or sell at. That is the key. Right? If we're going to be identifying these reversals, we need to wait for key evidence. We need to wait for prices to be in a key area of a higher time frame zone, right? So we see prices go sideways and then start reversing, taking out pivot points, breaking trend lines, and we start going to the upside, right? That's when we're trying to buy. And so we see here now, okay, now we're higher highs and higher lows, higher highs and higher lows. Okay, that's how prices turn from inside out. And it's the same thing here if we were to scroll in on a 1-minute time frame. So the time frame sequences that you guys might want to consider are going to be these time frames, okay? If you're interested in more long-term swing trading and position trading, you might want to use monthly as your higher time frame and your daily time frame as your lower time frame for the confirmation, right? Same thing for like swing trading. Maybe you want to use the weekly as your higher time frame and then your 4-hour or 2-hour as your confirmation, waiting for prices to turn, right? And then it's different for these type of traders. If you're scalping, you know what? Maybe you use the 1-hour, 1 minute, maybe the 4-hour, 15/5 minute, right? It depends on the type of trader you are, okay? So those are time frame sequences that you can use, and we're going to show you how to properly do this right now by looking at trade examples and trade setups that are actively pending, okay? So the first thing that we want to do on any chart that you've seen so far is we have a higher time frame. We don't just simply go to a chart and just decide buy or sell. We always want to make sure that, you know, whatever strategy that you're using, supply and demand, support and resistance, whatever type of theory analysis you want to use, you want to be looking at a higher time frame to determine, are you in an area of interest that you want to be buying or selling in, all right? And for me, I like to use maybe supply and demand, support and resistance as my overall theory concept of why I'm looking for buys or sells. So if we look here at the dollar right now, honestly, a lot of people have been losing money looking at the dollar, right? This thing has been rallying nonstop. And you know who's been trying to sell the US dollar? The retail public. If we actually look at the Forex sentiment on these traders, 88% of these traders are trying to buy or trying to sell the US dollar. So this is Euro USD. So they're trying to buy the euro as this thing's falling. So if we look at the euro, this thing's just falling. Why are they trying to buy this thing when it's just falling? It doesn't make any sense, okay? There are key areas that we were looking for that I had on my watch list that I'm like, hey, this is a really good area to be looking for buying opportunities on a daily time frame, okay? Starting on a higher time frame, I always start off by drawing out areas of interest that I want to look for buyers or sells at on a higher time frame. That was very important what I just said. Always start on your higher time frame. Where do you think that you want to be a buyer or seller at? Okay, ask yourself that. Where do you want to be a buyer or seller at? And only be a trader once prices enter or react off of those key areas. Okay, so prices come back into this area over the last week, back into this area of demand, which is also a pretty major support line that a lot of people are looking at. I was talking about, hey, I like this area for buying opportunities, but I need to wait for buyers to step in. So this is when we were talking about waiting for confirmation. What do you see here on a 1 hour time frame? This thing is just lower lows, lower highs, lower lows, lower highs. This entire time, we haven't had any type of buying confirmation. Do you see buyers trying to step in? No. If you're going to see buyers step in, you're going to see this. You're going to see on a 1 hour time frame, price taking out lower lows, lower highs, and creating higher highs and higher lows, right? We're going to be breaking trend lines, right? I don't see any of that. So why are people trying to buy this thing? They're just going on a whim, doubling down on their losses. A lot of accounts are getting washed right now. A lot of EAs that are doubling down on their accounts are getting absolutely crushed right now, trying to buy this thing as it's been falling. A lot of people have blown their accounts, and it's going to get to the point where eventually it's going to start reversing. So we're coming into key areas right now where I want to consider looking for buying opportunities, but I don't want to yet buy until I start going like this, okay? Until I start seeing price go like this, and then I will buy that pullback, right? I want to see prices breaking downward structure, breaking trend lines, removing pivot points. Okay, I want to see this done extremely quickly. So let's talk about some trade examples, okay? Let's talk about, I got a couple of these marked off right here. Let's look at natural gas. Natural gas is one that is currently inside a higher time frame, an area of interest that I think buyers might try to step in. I think right now price is reacting off of this kind of poor support, but also this demand area. Very large stack of buying came in right here before, right? A lot of buying came into the market. So if prices return back into this area, I will look for buying opportunities in here, but I have to wait for those buyers to step in. So if we go down to like a 30-minute chart, you're going to see this thing. Let's go to a 1 hour chart. This thing is just lower lows and lower highs yet. This thing has not shown any type of confirmation yet, guys. All right, it's still lower lows and lower highs. In order for me to buy this, I need to see prices probably going at least like this, okay? And then maybe I'll consider that buy back into there, or if it continues to make new higher highs, then I'm starting to get long here on pullbacks back here, right? And I'm going to talk about trade management, stop losses, entries, take profit, okay? But that's what I'm waiting for. I need this type of confirmation. This is how prices turn. It's the same thing on every type of time frame sequence that we just talked about. We look at wheat. Wheat yesterday was shared, I think, in the watch list. I don't trade wheat, but I post, just things that are, potential opportunities for people to learn the strategy and to see these opportunities and to train their eyes to see what I see, basically, right? I don't trade it, but I post it just for the kicks and giggles, okay? So this was a trade setup that did really well. Look what prices was doing, all right? Price was inside a higher time frame daily / 4 hour demand zone. Prices pulled back into that area. Same thing, guys. When you see prices falling into this, what are you going to see? You're going to see lower lows and lower highs, guys. We always want to be looking for key areas of interest and buyers on a higher time frame. And then we want to wait on a lower time frame for buyers to step in, right? So in this case, we need to wait for confirmation. We go down to a 15-minute time frame, which was the time frame we were talking about. And this was our type of confirmation where we broke downward trend lines, removed the opposing pivot point zones, and we're buying the pullback back into here, okay? Let me show you one that I'm currently waiting for. Oil right now is in an interesting level because those look pretty easy to spot, okay? What about if prices take a long time to show confirmation, right? This is a different way that prices might look at confirmation. So on oil right now, I really like looking for buying opportunities. 4-hour time frame, prices are pulling back into this area of 4-hour / daily demand zone right here. You guys see that? Perfect. So I want to be looking for buying opportunity. Okay, we go down to a 15-minute chart. What are you going to see? Look at this, guys. When it was coming down, lower lows, lower highs. Now it's going sideways. I'm sitting here like, hey, come on, just show me the evidence of buyers. Show me the evidence of buyers. I'm not buying this thing until I get evidence. Okay, I don't have anything like that until, I don't have anything yet. Prices have remained sideways. So I won't buy this thing until prices maybe go like this. And once prices do this in a very strong fashion, that's when I will probably have some type of pending order sitting there, and I will buy the pullback back into here with my stop loss probably being down here, okay? Stop loss either down here or right here below structure, okay? I would probably lean towards maybe down here. And then what I will do is if I see prices coming back up into here, this is where I see sellers potentially retaking control in the market. I'm just trying to get out maybe around there, all right? Get out here. What I will do is if this thing starts going in my favor, I'm going to start adding to my position, okay? This thing has gone from down to sideways to now going up. I'm a higher time frame bull. I'm bullish. I want to look for buys. As this thing's making higher highs and higher lows, I'm going to be trying to buy pullbacks back into these demand zones or breakout areas, right, as prices make its rally to the upside. That's what I'm going to try to be doing, and then I'm going to be moving my stop up a bit as I go through, right? And so if I lose this trade altogether, if this is like $1,000 trade, if prices come back and stop me out, I lose 1,000. If prices rally up to here, I make 1,000, all right, on one position. But if I'm able to enter in and add to my position, I might make overall in this position, 2,000, maybe 3,000, right? With only limited maximum $1,000 loss, maybe $500 loss, because I'll be moving my original stop up, and then I'll be adding to my new position, right? And I'll just have my stop here, right? So I'll still lose 1,000, but if I end up being a winner on my overall win on this, it's going to be like a $2,000 to $3,000 win, right? That's what I'm trying to do here on this, right? This is a different conversation here that I think would be good for a different type of video talking about trade management, because at some point, if it starts reversing, I don't want to be holding this thing, right? I don't want to say like, oh, I'm all in it. I'm either going to win or lose. No, if I see this thing no longer going to the upside, I'll probably want to close out and get out at a smaller loss. All right, that's a different type of video. If you guys want to hear that, I will make an hour-long, 20-minute video talking about trade management. Okay, let's talk about another example. Okay, S&P. There was a good example. If we were looking at the S&P, it's really important to understand the concept of, previous days highs and lows and that type of stuff. And in fact, if you look at previous days, like this is something called edgeful. This is something you got to realize. If you're trading the S&P or any type of futures, 85% on Mondays, 85% of the time we are going to have a green day. That is extremely important. This is over the last 6 months. So going into Monday, I should be aware like, hey, this is a pretty bullish day overall statistically for the last 6 months. I probably want to be looking for buying opportunities, right? I probably want to be bullish, okay? If you guys wanted that EA and stuff like that, that will be in the description below. It's called Edgeful. And we were talking about this, about how important this key level is, going back into this area, because this was like weekly lows, but also the last 3-day lows when prices were pulling back into this area over here, right? And so you got this big move to the downside and you see it going sideways. I want to be looking for buys. It's a Monday. I'm pulling back into weekly lows where this is a really good demand / support. I got to wait for the confirmation, right? Got to wait for the confirmation. And I think there were a couple trade reviews. Did I post it here? Austin's trade reviews. This was one of the longs that I got into, okay? And we talk about this. As prices started breaking above pre-market highs, London highs, started breaking above this area, I'm like, hey, We're no longer in a sideways market. I probably want to get long. I tried getting long on the pullback here with my stop down here. I ended up closing it early because I thought this thing was going to keep going down. But then eventually I got into a new position because we actually continued to break to the upside here, and I bought the pullback in this case, right? And so as it was getting this squeeze and we got this pop to the upside, knowing all of these things are in my higher time frame bias, and I got this really good demand zone pop to the upside confirmation, I'm buying this thing and I'm trying to add into my winning trade. This was not an add into my winning trade, but because I cut this trade early, right, and I let this one ride a little bit for my full take profit, I come out profitable, okay? This is trade management, this is risk management, okay? But what you're going to notice when it comes to this type of confirmation is, I think there's an example of what I don't want to see, okay? Because it's really important. S&P right now, I am going to be looking for longs going into this Friday session, okay? I don't want to see, I really like this for longs because if we look on a higher time frame, I see this thing going up, higher highs, higher lows, the market's rigged to go up. I think we could also slap on like a 200 moving average, we're above it, it's probably touching a 100 moving average. We've got, you know, imbalance, correction, imbalance, correction. I like this area for buying opportunities now. I think we're going to go to the upside, okay? What I need to wait for is confirmation. Now, I'll show you what I don't like about this. I don't like how long it's taken. If you'll notice, we've broken this downward momentum line, but we haven't done anything. Like, look at this. Look how long it's taking. We've broken this and it's just going like this, slowly grinding up, okay? What do you notice about this versus this trade? Big, strong move to the upside very quickly, okay? What do you notice about this trade? Okay, price is breaking out of a zone. What do you notice about this? Very strong move to the upside. It's taking out these opposing structure levels for confirmation to the upside very quickly, okay? We look at this trade review, okay? Sideways action, right? We talked about this. This could be a form of confirmation. It's going sideways. What are we waiting for? Waiting for the pop up or buying the pullback, right? That's what I'm waiting for. Either a stop down here or maybe a stop here, okay? Buy the pullback, stop down here, right? Strong move, okay? Look at this one. This is Tyson. Look, guys, look. It's very easy. It's very easy concept to understand. Don't overthink it. Lower low, lower high, lower low, lower high. Boom, boom. Okay, very strong move very quickly. It's not grinding up like this, okay? Don't take setups like this, and don't suffocate your stop loss. That's a different video. We got to talk about stop losses and trade management, right? But don't suffocate your trade. Let it breathe. Let it do its thing, okay? Don't be so quick to enter and exit your trade and hit a full loss. I would rather have a wide loss, okay, and get out at a smaller loss instead of it quickly hitting my stop loss. I'd rather take a small loss, right? And I'd rather add into my winning trades as it's going up, okay? So what I see right now, I don't like this. I don't like this. I really liked it for buys, but I don't like how long this is taking like this. I don't like that, okay? So that's what I'm trying to look for. I always start with my higher time frame, okay, guys? So if you have a higher time frame that looks like this, okay? Let's just say, I don't know, it's like this, and you got prices pulling back here on a 4-hour time frame, back into a key level of demand, which is also support, which is also whatever you want it to be. Maybe we're in an uptrend. Maybe gold's up at all-time high levels, right? Things only go up. I should probably be a long bias right here. Now, I want to wait for the confirmation, and once prices start breaking this structure, going sideways and going up, that's when I'm getting long, okay? That's how I'm entering these type of long confirmation trade setups. And that's all you really have to do. It's a very easy concept to understand. Don't overthink it. Just make sure you manage risk. I appreciate if you guys like the video, subscribe. In fact, I will have a 30-minute video above my head right now going over my exact strategy of what we just talked about here in this video. Appreciate if you guys like the video, subscribe, and I will see you guys in the next one. Cheers. Bye-bye.